With all eyes on tax day today, there is a proposed tax change in Massachusetts that would impose a 4% surtax on annual taxable income above $1 million. That would start in 2023. Let's get the read from Tax Foundation President Scott Hodge. Scott, great to see you again. There was a time in the old days when there were some sensible people in Massachusetts, believe it or not, and they called it Taxachusetts, and they got tax reform in there, but it looks like they're going way in the other direction. These surcharges never work. Eventually, they drive capital out of the state, don't they?
Well, David, as you know, the first rule of tax policy is that if you tax something, you get less of it. Right. And that's true for smokers and pollution and millionaires. And when states try to tax millionaires, they have a number of choices. They can move, as thousands of people are doing from New York to Florida or California to Texas, or they can change the composition of their income in order to reduce their tax liability and their taxable income. And that's what a lot of people will do. And as a result, the states don't generate as much revenues as they think they will, and then it can also have an impact on the federal treasury as well.
We were talking earlier in this broadcast about incentives and about how Democrats just don't get the idea, the concept of incentives, and perhaps more important in this case, disincentives. If you want to drive capital away, you have these kind of outrageous extra charges for success, right?
Well, these are success taxes, and there's been a war on success here in the United States for the last couple of years. And whether it's taxing wealth or taxing other types of income or taxing estates, they are after success. And as I testified before Elizabeth Warren's committee last year, I mentioned that when you tax wealth like this, people have to divest themselves of some of that wealth in order to pay the tax. Foreign investors come in, buy up those assets, and you change the composition of U.S. ownership for foreign ownership, and it puts that wealth out of the hands and out of the reach of the wealth tax. So there are a lot of defeating purposes here and unintended consequences that a lot of these politicians simply don't understand.
Scott, I'm curious, how did Liz Warren respond to your explanation?
She looked at me like I had horns on my head. She was not happy.
But it's, you know, I'm sure you mentioned to her that it's been tried in more than a dozen places, particularly in Europe, and almost all of them have gotten rid of it because it didn't work. It led to getting less revenue as a result of people leaving or underreporting their income.
And that's exactly what happens in Europe, of course, where people can move freely across country borders in order to avoid these types of taxes. You see that happen a lot. And that's why the number of countries that have these wealth taxes has shrunk considerably over the last 2 decades, and only a handful do now. Yeah. But you have to remember that those taxes in Europe, those wealth taxes, are very, very small relative to what Elizabeth Warren was proposing, which was a massive increase on taxes on wealth.
Scott, I don't mean to sandbag you, but I want to throw something at you that I hadn't discussed beforehand, which is the idea of, we now see Joe Biden's 2021 return. He's always going on about how the rich are not paying their fair share. I just did my taxes over the weekend. I paid 37% in federal tax, 37% of my income. He paid 24.6% in federal taxes. I paid 50% more than that rich guy did. I mean, who is he to point fingers at people not paying their fair share when he's not paying his fair share according to tax standards?
Yeah, he who lives in a glass house shouldn't throw stones. You just need more deductions, David. More loopholes. But it
I live in New York, so they've been taken away. And that's really the point. We got to end all loopholes and just get a basic flat tax, right? Quickly.
I wish it were that simple, but yes, we do need tax simplification badly. One of the reasons why the IRS is now melting down is because Congress has made the tax code so complicated and forced the IRS to be a provider of benefits, in many cases welfare benefits or other social benefits, and it's
Scott,
simply
we got to leave it at that. I'm sorry to cut you off. Good to see you, my friend.